Hi guys, Cass here from Your Mortgage Coach. Happy Thursday. As some of you may have heard this morning, Westpac has increased their interest rates by 14 basis points, which is just great. Not. Their reasoning for this is that their wholesale funding costs have increased and they therefore need to pass on this cost to their customers. So what does this mean for you? If you don't bank with Westpac, should you be concerned? Absolutely. Most of our lenders obtain their funds from the same wholesalers, which means that if Westpac's increasing their rates, it's pretty likely that the other lenders are going to do the same. So how can you avoid this? If your circumstances allow it, I would definitely suggest you considering refinancing your home loan as soon as possible. And the reasoning for that is that other lenders are offering really great rates, particularly in the fixed rate space. And you're looking at between sort of 3.6, 3.9, those sorts of rates if it's a owner-occupied property, less than 80% LVR. Then you can also look at doing a split facility as well. So that's a little bit fixed, a little bit variable. Gives you a little bit of comfort if the interest rates do increase, but still gives you that little bit of flexibility with having offset accounts and redraws and things like that that you have with variable rate products. There's also something else that you can look at, which is called a rate lock, and that allows you to secure the interest rate as at the date of application. So if you're looking at if the rates increase between application and when you actually settle, which it can sometimes be a 3 or 4 week period, rates can potentially increase. It means that you will secure the rate as at the date of application. So if you sign the application and you pay the rate lock fee, then if you've signed, for example, a rate for 2 years at 3.69, that's the rate that you will get for the next 2 years. If you don't do that, which you don't have to, if you don't and the interest rates increase, you will then get whatever the rate is at settlement time date. So if the rates have gone up to 3.8, then that's the rate you would get for settlement. So as I said, rate lock fee is involved. So there is a fee that's involved with this, and most lenders charge a fee. Pretty much it's somewhere around the 750 or 0.15% of the loan amount. It differs between lender to lender, but that's generally what the figure is. So you just have to work out whether or not it's going to be worth paying that, and anticipating what the rate rise may be and what that sort of entails for you. But that's something that we can talk about anyway. If you aren't in a position to refinance, whether it's for income or whatever your reason is at the moment that you can't look at refinancing, I would definitely recommend you going back to your lender and have a chat with them and see whether or not you can look at either changing over to a fixed rate product, or maybe doing a split where you've got some fixed, some variable. And certainly have a chat to them about, reducing your interest rate if possible. If you've been a good customer, they'll want to look after you, and they may well reduce the rate for you anyway. But if you're keen on looking at refinancing, feel free to give me a call. I'm happy to have a chat with you and just run through a scenario, do a bit of a home loan health check for you. My number is 1300 100 262 or 1300 100 coach, whichever is easier for you to remember. And you can head to our website at yourmortgagecoach.com.au. Hope to catch up with you soon. Have a fantastic Thursday. Thanks guys. Bye.